There's no shortage of surprises in the silver market these days, and it's best reflected in the price. Silver yet again has reached yet another record high, surpassing the $64 mark. And in this video, I'm going to explain why it could surge much further. Let's talk about it as we explore. I try my best to be as realistic as I can about the silver market. The realism right now is that silver is on a tear. There's no question about it. However, I have been accused in the past of being overly pessimistic in terms of silver's price performance. Honestly, I have been surprised by this, and I have also fallen for the hype of the bull market. But I have to keep myself in check and also want to keep everybody else in check by being as realistic as I can and understanding that this is unusual and usually what goes up must come down. And that's going to happen with the silver market. Make no mistake about it. It may not be tomorrow. It may not be next week. In fact, it may not even be next month heading into January of 2026. And I'm open-minded to that as well. But sooner or later, there is going to be a reckoning in the silver market, and that reckoning, in terms of the consolidation of price and moving back into a normal situation, I think it's going to be a very good thing for silver stackers when it's all said and done. Now, I'll talk about that later as well. But nonetheless, silver is a metal that we should appreciate and enjoy for what it is, not just because of its price, but because of its wealth proposition over the long course of time. And Summit Metals, their slogan is elevate your wealth by holding and measuring your value and your wealth in ounces, not necessarily dollars. So this is why I'm still a buyer at these prices, even if they were to fall dramatically in the next couple of days. But I also believe there's a time to sell a portion of your stack if it's going to benefit you and your family, especially with the markets moving these days. So check Summit Metals out in the description below whether you want to buy or sell. But right now we're talking about the price and how it could climb even further. First, let's get into what happened today. A massive move in silver's price. Before pulling back, it got up to $64.36 at a session high today. It is now up 2.92%, up $1.80 to $63.67. Gold is up just 1.17%. Still a pretty good notable move for gold, up $49.60 to $4,279. Gold, a much more stable metal than silver, but silver has been on a tear lately for sure. Platinum also saw healthy gains, up over 2.4%, back now above $1,700 an ounce. Palladium is up $22 an ounce. Now, the gold to silver ratio is the thing to watch. It is now well below 70 at this point in time. In fact, it is at 67.29. That's right, just 67 ounces of silver for 1 ounce of gold. Silver is finally catching up. Many of us stackers of silver have been waiting for this and have been longed for the day when we could see some sort of normalcy between the gold to silver ratio from what we remember. And that was around the 55 to 65 range, and we're getting very close to it now. However, this is a different time. This is a different market than it was back when this channel started 13 years ago. So this is what we're looking at here. So let's talk a little bit about what happened overall, and then we'll discuss the reasons why silver's prices could continue to climb further. I'm going to be referencing an article here from Jim Wyckoff about what happened in the markets today. We saw sharp moves for gold and silver, and this is huge daily gains in the silver market that pushed the metal to yet another all-time high. The two precious metals are seeing solid technical buying and are benefiting from a surprisingly dovish lean from the Federal Reserve. Strong losses in the U.S. dollar index that drove to a 6-week low also are supporting buying interest in precious metals. The Federal Reserve's Open Market Committee confirmed and delivered a 0.25% interest rate cut, which was fully expected by the marketplace and was the third quarter-point rate cut in a row for the FOMC. And they voted 9-3 to lower the benchmark federal funds rate by a quarter point to the range of 3.5% to 3.75%, which means there's more room for them to cut even more. The FOMC statement suggested greater uncertainty about what the Fed might cut rates again. The Fed surprised markets by saying it will begin buying $40 billion of Treasury bills per month starting February, in a move to further ease short-term funding costs by rebuilding reserves in the financial system. Money markets have been flashing signals in recent months that pressures were building up in the $12.6 trillion market while the Fed was shrinking its balance sheet. U.S. stock indexes have rallied to almost a near all-time high. U.S. Treasury yields dipped, and the U.S. dollar index sold off as well. And gold and silver prices rallied, followed by the FOMC's meeting conclusion and Fed Chair Jerome Powell's press conference Wednesday afternoon. Now, in the days leading up to this week's meeting from the Fed, most of the marketplace came to reckon that despite the expected rate cut, the Fed and Powell would deliver a somewhat hawkish tone on U.S. monetary policy. However, the marketplace saw the Fed's dovish move to buy U.S. Treasury bills as usurping any other Fed rhetoric that might have seemed hawkish. Remember, it's psychology. They're reading that into it, and that has caused the markets to react. And so this is what's caused the price to climb up even further. $64.30. It's pretty amazing. That's what's occurring there. Now, what is bolstering up silver's price and why it could move a whole lot further? I think today's silver price move, and then scaling back from an overreaction, at least in part from today's moves, could just be temporary, and we could see what we're looking at as we move forward. It is the supply crunch. That is really what's happening here, according to carbon credits. The supply crunch is one of the reasons why the prices keep rising and why we could see them rise further. There is tension in the silver market all around. And we've seen sharp gains already this year, well over 110% move from the beginning of the year with silver, a massive bull run. Silver's price more than doubled as the market tightened and demand surged. At times in late November and early December, spot prices traded in the upper 50s, with intraday highs reaching and exceeding $58.80. The December 9th breakout to the $60 level represents a new peak, making a milestone for the rally this year. But we saw today, after markets opened, silver extending those gains, touching up to $64.36, which is a new historic all-time high, measured in nominal dollars. That's right. It's just nominal dollars that we're talking about here. But we are now $10 shy of silver reaching an all-time high when adjusted for inflation. So we still got a little ways to go, and that is based off the 2011 high. I don't count 1980 because that was such an unusual circumstance, likely never to happen again. What we're seeing here is more closely tied to what happened in 2011, although it is different too. This time, this different really is a phrase that is applicable in this market. And so what's behind this surge and the consistent and why it's going to continue is we have a supply deficit that is continuing to make itself known. Mine production has stagnated now while demand continues to grow, particularly from industrial sectors. And we have seen mine production increase, but it's only been marginally and not enough to keep up with the demand. And likely in 2026, we're going to see the same thing. It takes a while to ramp up a mine, and silver is mostly mined as a byproduct of other metals. So that is something that is going to persist next year. Strong industrial demand is another one, especially from sectors tied to renewable energy, such as photovoltaics, the solar, electronics, and emerging technologies that rely on silver's conductive and other properties. That is what we're seeing. And a lot of that is recession-proof, or recession-resistant, rather. And also, a lot of that is based off of what we're seeing with the green energy initiatives that are essentially being mandated by governments around the world. And even though it's eased back here in the United States, many companies are still pursuing it regardless here in the U.S., but certainly around the world, which makes them, in a sense, recession-resistant. The next is investor demand. Now, this has been a lagging indicator, and to some extent, really, it's not playing as much of a role. But nonetheless, this is a situation that could pick up. People see what's going on with silver rising so fast. New silver stackers could come aboard. And with silver prices pushing highs like this, and people coming into the market, it could be dangerous for them. In other words, we could see big pullbacks that could squash their confidence. Be prepared whenever you buy an ounce of silver from anywhere, including the channel sponsor, that the price could collapse or fall dramatically the very next day. Silver is volatile. Understand that before you get in to buy. But with economic uncertainty, inflationary pressures, and potential interest rate shifts, silver is once again being viewed as a hedge and a store of value, as well as a commodity that has a lot of potential. And many people see silver's doubling of price this year. Silver is being seen as an investment. And I think that's generally unhealthy, because you should see it as a hedge against economic instability, wealth outside of the system. But nonetheless, we're spoiled in the silver market, and likely that is probably going to continue. And it's all based off of psychology and the macro trends that is behind this surge and why it's going to continue to grow. Then this other situation that we're seeing is structural constraints and supply growth. It's often a byproduct in mines for other metals, and higher prices do not always lead to a proportionally greater new supply, especially with what's going on with China restricting exports starting in January of 2026. We're seeing other areas of supply constraints and problems with getting silver to the LBMA, which that is now starting to ease the tensions there. We are in contango again, but it's in a sense too little too late to some extent, with Shanghai starting to replenish its vaults now. But still, it's going to take a while. We'll see how this plays out. Many forecasters predict a continued silver deficit through 2026. And that is going to mean that there's going to be problems, especially with some of these big buyers like JP Morgan, as I talked about in my video from earlier today. JP Morgan buying a whole lot of silver, other institutional buyers, and a lot of people wanting to get delivery of actual physical silver. If we see that continue in a push in the investor realm, even institutional investors, as well as big millionaires, billionaires buying silver, even people like Elon Musk are maybe quietly making purchases, seeing what's happening. Silver is so important for what Elon Musk does in all of his operations and businesses. So we'll see how this plays out. I think we might see some hiccups in the market where the price falls even dramatically in several trading sessions at the most. But I think likely we're going to see the prices climb further based off of what I talked about here. I strive to bring you the latest news and analysis in the world of precious metals. If you enjoy what I do here, I hope you will consider subscribing to the channel, pressing that thumbs up button, and hitting the notifications bell so that you can be apprised of the latest news that makes its way across your device. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and have diamond fist to hold on to your silver tight.